Now, on to oil prices. They've edged up slightly in Tuesday trading. They fell down below the $40 barrel mark on Monday. That's the first time they've been that low since April. Remember, they were right down about $28 at the beginning of the year. Experts say that the markets continued to be dogged by excess production, unlikely to see a significant recovery in the price of the black stuff until next year. Well, I'm joined by Abhishek Deshpande, who's Chief Energy Analyst at Natixis. Abhishek, what's gone wrong with the oil price? Why haven't we seen any kind of growth? We've seen not brilliant growth figures out of the US, but enough, I would have thought, to push it a bit higher.
The problem is markets are pricing or overpricing it way in advance. As we saw, the rally was way too quick and way too much in the first half of the year.
So markets were ahead of themselves, basically.
Markets were ahead of themselves. Because of that, investors, which is the artificial paper demand for oil, got in too early, too soon. They increased the paper demand by almost 3.5 million barrels per day additional, what is not really the fundamental demand. And now, in last 2 months, we have seen the paper demand has been reduced by 2.5 million barrels per day once again, and that is taking the floor away from the market.
What's OPEC's reaction going to be to all this? Is there any attempt to cut back on supply, do you think, there, or are they quite happy to leave the taps open?
To be honest, OPEC was getting a little bit happy with the situation when they met in June this year, when they saw the prices were going upwards. They, of course, did not anticipate, which we were already seeing, the financial market support was a bit too much ahead of their time. I don't think OPEC is going to change their decision, because if they really want a sustainable change in this market, they have to let the supply and demand balance by itself. And by doing so, they can only do by letting the markets balance out, by letting the non-OPEC producers get out of the
Where's
system.
he going to a balance, do you think? What sort of level?
Well, to be honest, once again, the oil price rally, because this is a good example to quote here, oil price rally in the first half of the year has led to a lot of US oil producers hedging their production at the back end of 2017. That meant that they have brought their rigs online again, and we have seen some...
So they've started producing too much already, so we actually really do have quite an oversupply.
Exactly. I mean, the oversupply is not too much, but I think the markets had anticipated a far bigger decline in production.
What that suggests is quite a lot of those oil producers actually quite desperate to make money. They must be really feeling the squeeze at this sort of price, aren't they?
Totally. They were in the survival mode, and that survival mode itself kind of indicated that they were hedging as soon as the prices rallied in the first half of the year. Now, the problem is, as we are entering the second half, a lot of these integrated oil companies, which are otherwise feeling the pain from the oil side, which is the upstream side, have also started feeling the pain from the downstream side, because the refining margins are coming under pressure as well.
Just very briefly, is anyone expecting economic growth to actually suck up this supply and keep the price buoyant at about, what, $50 a barrel, back up to 50?
Not... In all reality, we do expect demand to grow, but not as fast or as quickly, especially the initial indicators are not giving any such signs so far.
OK, Abhishek Deshpande, thank you very much indeed for that. Just got a quick moment to have a look at the market.